Well, the markets bounced back big today. The S&P, in fact, had its best session in 2 months, led by those financials, because investors were champing at the bit all day long about a potential 10-figure windfall. Well, as it turns out, the comprehensive capital analysis and review, otherwise known as the stress test, that decided how much financials can return to shareholders, it's big. We thought it would be $120 billion coming into the session. The news I'm seeing so far, it looks like between these dividends and these massive buybacks will be a lot more than that. Get this, Morgan Stanley said they're going to buy back $5 billion in stock. Wells Fargo, $11.5 billion. American Express, $4.4 billion. Citigroup, $15.6 billion. JP Morgan's coming in there big, too. So the financials at this very moment are soaring, but they also soared after the election. And, I got to tell you, many people consider them to be an integral part of the so-called Trump trade, in part because they should benefit from our economy and also the dismantling of Dodd-Frank. But they were underperformers big time this year, not now. Up big time. If you're in some financials, you're probably going to be very happy in the morning. Techs were the second best performing sector today, bouncing back nicely after struggling early. Let's face it, President Trump hinted at some sort of tax action against Amazon. Jeff Bezos, who is the founder of Amazon, also owns the Washington Post, which, well, they've run virtually nonstop negative articles against the president. But it looks like Amazon moved to buy Whole Foods is really the big news after the market because it's weighing in on the IPO pricing of meal kit delivery service Blue Apron. They're pricing their IPO at the lowest end possible without having to refile, $10 a share. It values the company at $1.9 billion. Earlier, though, the ranges were thought to be between $15 and $17, so it's down dramatically. By the way, those cracks in the armor of tech, they began with CNBC, a lot of famous short seller to verbally annihilate NVIDIA. That was 2 weeks ago. Remember that day tech stocks were up? All the hot names gave up big gains that day, and they came down a lot. Well, today, NVIDIA led tech names back, along with PayPal, which I think is the screaming buy. The market also upbeat about the fact that the Senate going back to the drawing board on health care, and we could get a CBO score on Friday, and believe it or not, might even sneak something in there in terms of a vote. That would be huge news for the market and a sign that the Trump economic agenda train is finally moving out of the station. As far as the broad market, I want you to take a look at the charts when you get a chance. I mean, these major indices, it's almost embarrassing to admit that a lot of investors for the last 48 hours were on the edge of panic. Now, admittedly, we could see more volatility, even maybe some scares, but the fundamental underpinnings to this rally, folks, keep this in mind. They keep getting better. Finally, Sycamore Partners announcing that they will acquire Staples for $6.9 billion or $10.25 a share in cash. Wish them luck with that.